The European Central Bank has cut interest rates to 3.75%, with the bank saying the inflation outlook has improved markedly. But even though inflation has eased, the bank is warning price pressures remain. Deutsche Welle correspondent Stephen Beardsley joins us now live from Berlin. Stephen, good afternoon to you. Why is this rate cut then so important?
Hi, Lorna. As we know, and as your viewers know, this inflation fight is happening around the world, especially in Australia at the moment. What we're seeing here, though, is that quarter percentage point rate cut, not so big on the face of it, but and also when you look at the ECB not being the first major economy even to do it, following Canada a couple of days ago. But what's interesting here is that it does come before the U.S. The U.S. debating whether later this year to make its first cut. And if you had looked back a year and a half ago, the tables were completely turned. The U.S., of course, having a better time fighting inflation, prices clearly going down, whereas Europe was still licking its wounds due to those energy price hikes after the war began with Ukraine. The U.S. economy has generally done much better than it has in Europe. And in fact, the European outlook isn't that great right now. But as we know, inflation in the U.S. has proved to be stickier, probably because of that economy doing so well. And ultimately, you have to say the ECB has done a good job of walking that kind of tightrope, cooling inflation on the one hand, but also maintaining borrowing rates that could support member governments. Remember, there are 20 different governments that use the euro here. So ultimately, this is a positive sign. It's good for businesses as well, who will have to pay less to borrow money, and overall positive sign for households too.
OK, Europe's been struggling, hasn't it, since the pandemic and with the ongoing war in Ukraine. Does this suggest things are looking better now?
Yeah, in some ways, you could say that things are economically looking a bit better. Energy prices, which we mentioned, have actually stabilized over the past 2 years. That looks a lot better. And when you look at what's happening right now, summer tourism is in its high. That's good for the southern European countries in particular, like Spain, Italy, Greece, that really rely on it. The Summer Olympics are coming in France. All of those are positive things that can help the mood a bit. But ultimately, there are really big issues that still cloud the outlook. First and foremost is the war. Nobody knows what course that's going to take. That is still an inflationary pressure, but that's also a very serious political pressure. Interest rates are still high, even if they have been cut for the first time. As you mentioned, Lagarde very cautious about future cuts as well. So we don't really know where that's going. We also have big questions about general competitiveness for countries like Germany, the traditional economic engine of Europe. So all of these are really looming over Europe at the time. And on top of this, you have these real kind of structural questions that aren't going to go away, including the costs that Europe is incurring to fight climate change. Those have to be paid. And then, of course, the demographic change, the lower birth rates that are really going to provide labor challenges. Both of those issues, labor and climate, are going to be long-term inflationary issues that are going to weigh down on these economies.
OK, now, Stephen, populist parties are expected to gain in the European Parliament elections. They're happening this weekend. What could that mean for the continent that's still struggling economically?
Yeah, first, it's important to point out that it looks like mainstream parties are going to hold on to their majorities. At the same time, if there is a good showing by populist parties, then that would send a very strong signal to the political establishment there that things aren't going to go as normal, especially business as normal will not continue. We would expect that there would be less of an environmental focus in the sessions to come, and that there would be more of a focus, of course, on immigration, which is one of the strongest topics for populists. At the same time, one often notices that it's economic issues where populists tend to struggle the most. An EU exit for many countries is no longer as attractive as it might have once been after watching the UK struggle so much in the past years. Also, if you look at energy prices being lowered, well, returning to Russia and that natural gas, that isn't really so popular as well in polling. The one issue that really where they hit is immigration. But again, if you're going to limit immigration to the EU, that plays into those demographic challenges that are going to long-term beset these economies. So when you're looking for your future kindergarten teachers, when you're looking for your future nurses, they're going to have to come from somewhere. And so those are the long-term issues that populists have really struggled to kind of come up with plans for. And I think that's going to be definitive in the years to come.
Stephen Beardsley, thanks very much.